first TP, we just sit there. First TP is just sit there, and it's going all the way down. As you can see, the signal was just given on top here.
Okay, so let me just try and explain the Fibonacci using the mobile strategy and how the mobile strategy actually works. So we go back to the 1 week time frame. This is the 1 week time frame. As you can see, the market is still loading right here. So one thing I'd like to show you guys is how you can use the Fibonacci retracement. Let me see. So you go to the as you can see, you go to that point here. Let me go back a little bit. Okay, so here's how you're going to use the Fibonacci. You need to click on the screen like I'm doing right here. You see, you bring up this menu, you get these tools right here, and what you need to do is click on. Okay, let me just delete everything which is there. Let me just delete this one. So the Fibonacci is at that point. If you're not going to find the Fibonacci, click a plus sign. You look for the Fibonacci. So the Fibonacci is there's a Fibonacci time zone, Fibonacci fan, Fibonacci, like Fibonacci channel, everything, expansion, and yeah. So we get the Fibonacci retracement. This is what we're going to use at this point. So get the Fibonacci retracement. Then what you do is you get it at that point, and you can draw from that point. But okay, most of the times what you need to do is let me get rid of this fib right here. Get rid of this weekly fib right here, so that we draw it properly. So we get the Fibonacci, we go to the lowest point of the markets, and you draw it from that point and move it all the way up. So the 0 is supposed to be on the toppest part of the market. You can even extend it to that point like that. Then the 100 is going to be at the lowest point of the market. So that we get these levels which are going to see at this point here. Let me just move the market a little bit. Okay, I think that's way too far from the screen, so let me just move it a little bit closer. Yeah, something like that. So that you get to see so you have to be careful when it comes to this. So we prefer using the PC most of the times. So yeah, so that you get to see the level. So this level, the 23, is marked as a support. The 38 is marked as a support. The 50 is also marked as a support. Even the 61 is marked as a support, since we're trading the retracement of the market. So if you go back to the lower time frame, like the 4 hours, you find that the market has just been bouncing at the level 23. This is level 23 right here. This is the level 23 right here. Okay, let me just go back to the 1 week again. Let me just try to move it a little bit close to the, yeah, somewhere there, a little bit closer, so that we get to see. Yeah, so as you can see now, this is where the market has just been ranging from the time it started dropping. From that point where it started dropping. Yeah, you see that the market has just been bouncing at the level 23 from the time the market started bouncing back, coming back from that point, going all the way to that point. You can see that the market has been ranging, bouncing at the level 23. That's it's a 4-hour time frame. Yeah, so this is where now I see the market changing at the same point. This is the 23, the support level. So another level, which I said is going to be the support, it's going to be the 23. Then the 50 is going to act as that's why the breakout happened from the previous market where it was going up. Then as you can see, the level 61 is clearly a support level in the market right there. So what we're waiting for right at this point is a breakout of the 23. Once the market breaks out, that's where we have sell positions at that point, or sell positions. So we're just waiting for that breakout. Once that breakout breaks out, then all these are going to be in massive profits. They're going to be in massive profits. Then yeah, so this is the fib. This is the actually the trade we were talking about that time. So if you check, this is the profit right there. Then yeah. Oh, so this is the profit we took. Yeah, this is the profit we took. But the same setup we talked about, and is what's happening. We took some more trades at that point, and look at what happened. It went back to the support, the previous support, which formed as resistance now, the level 23 as we talked about. So we go back to the 1 week time frame. This is what you're going to find. So that's a retracement we're looking at. Oh, this is a monthly. Let me go to this is a monthly candlestick. So let me go to the week. Let me go to the 1 week. Okay. So look at the 1 week. Look at where the 23 is. Exactly sliced to exactly at that point where we said it's going to. Where we said it's going to do it. Where we said after a breakout of the support, we can expect some sales from that point, and the market is going to go all the way down. So we go back to the 4 hours. This is what we're going to see. This is the same level. This is the same level 23. This one. Let me go back to this point. Let me just move it a little bit so that you can see it. Okay, just at that point right there. Yeah, so let me now go back to the 4 hour time frame. Look at that, exactly where it made a bounce back. This was the support zone, as you can see. It was the support zone. Then after a breakout, like we said, it came back, make a retest as a resistance zone now. So right now the market is going down. It's a 4 hour time frame. So we have two nice bearish candles which are going down. Then yeah, it will proceed all the way down. As you can see, the market just hit. This is the same level 23 at this point here. The same level 23 at that point. Look at that. A very good trading setup. The fib actually works. So what you're expecting is the market to come to 38, make a retest, come to 50. And come to 61. Those are the major support zones which we have. So yeah, as you can see, the market is running all the way down at this point right now. So yeah, it's a good one. It's a good one, guys. It's a very good one. So this is the movement for the week, like we said in the video. Anyways, let's proceed. And next year we're going to have something very big, like all the setups and all the indicators are going to be dropped here. So yeah, keep a watch out, keep a lookout. I mean, the other thing you need to look out for is the crossing of the moving average on the main chart here. I mean, on the indicator window here, the RSI and the moving average. You need to see all these as well. So if I go back to the lower time frames now, you're going to find that at this point, the market is just touched. This is a 20. The blue line which you're seeing here is a 20 mark. The blue line which is just down here is a 20 mark. So it's a 50 minutes time frame at this point right here. So if we were to draw a channel from this point, this is a 15. If we got the fib, or if we got the Fibonacci from this point, we draw it from that point going all the way up to the that point. Find that the 23 is at that point. And if we go back to the lower time frame, like a 5, you see where the 23 was. That's the lowest point of the market and the highest point of the market. So the 23 was at that point where you see the crossing and everything, like everything played out. So if you that's even where the Bollinger Band even touched the top band. So if we were to take our entries just below the 23 there, you see that the market doesn't really come back to a point, it goes all the way down. So for me, I took it up just after the range, then I look at the condition, the condition of the market, and I took entries at that point. I took one entry actually. It was a bigger lot size, as you can see, it's 3.1. It was a bigger lot size because I missed out all that, so I had to take at least one entry at that point. I had to wait for market to chase back. Just after market to chase back, it came back to a point, and I took other entries at that point, as you can see. Took other entries at that point. So I'm just waiting for the market to play out as it's supposed to play out, because here at this point that's where the crossing happened. The crossing happened at that point, then the market started going down, like the moving average was on the other side. The white moving average, exponential moving average, was on the other side of the market. So if we were to add another moving average on the main chart, which is going to be the exponential 40, you see what I'm talking about right here. And make it white as well. You see, so as long as the right moving average, the exponential 40 is on top, and yeah, the market plays out like that. And also the moving average, which people most of the times like using, is the 200 MA. So the 200 MA shows you how where the direction of the market is, how the market is moving. So if it's above the candlestick, which means it's showing some resistance. Then if it's under the moving average, under the candlesticks, it's showing support. So it only hits the support and resistance levels. As you can see there, it hits the resistance, then at this point was acting as a support. So unless you know how to use these moving averages, you get everything right. So here all the moving averages made at this point. This was the sparking point where you see a very good market movement, because this is where all the moving averages met. This is where all the conditions played out. Another example is going to be here. So if you have the TDI, the trading dynamic index, or whatever you call it, that one is going to play out the same way as you can see this, because that one consists of the Bollinger Band and moving averages. Yeah, and so the mobile strategy, how to use it, you have to wait. So at this point, this is where the market started buying from, where all the moving averages dashed. They started buying from that point and started buying. Okay, if you look at the 1 hour, the 1 hour is actually a bearish one. Then we're just waiting for the close of it. Then we're going to expect another 4-hour candlestick, which is going to open. So at this point, we're still trying to break the support at this point here. So I'm just hoping for a good breakout at this point. Once we just spot that good breakout, then yeah, we'll have a clear direction of how the market is going to move. So I don't know if you understand this or if you're getting this right now, but I'm just hoping you get it right, because this volatility 100 is, at least you can see what has been happening. If you look at back at the other videos which I posted, you see the same thing which is happening at this point right now. Anyways, happy trading. If you have any questions, the links are in the link description down there. You can make use of them and ask the questions you want to ask. So as you can see here, why you see this powerful crossing here, the market was going to go all the way up, and you can hold. This is for weeks. You hold for weeks. Another crossing which happened at that point. Anyways, the moving averages, they help out a lot. You should at least find some time. You go to the group. You find some PDFs which explain almost everything you need. And yeah, you can use all these to your advantage. then at least maybe your trading is going to change, because we're almost in December. 2022 has to be something which is going to have less struggle. So I'm just hoping everyone gets everything right at this point. Anyway, happy trading. I'm out.